today. We're very excited to have Scott and Ben come from Valley National Bank. Valley National just recently merged and acquired US Ameribank here locally. So they now have a much bigger local presence here in Tampa. They have a lot of interesting products on the mortgage side for homes, and so Scott's going to share a little bit about that and the programs that they have. So Scott, take it away.
Yeah, thanks, Nico. Appreciate you guys' time this morning and making a little bit of time for me to come in and talk about Valley National Bank. As Nico mentioned, we were recently acquired by Valley. Most of us were with US Ameribank, and while we were active on the mortgage front with US Ameribank, we didn't have the full suite of products that Valley now is able to offer. So there is a lot of excitement in the mortgage division within my bank in terms of the products we're now able to offer, and so we're becoming much more aggressive, and you're going to see us around more. We're calling way more frequently than we used to. The main reason I came out today was to talk about a partnership with a company called Unison that has a pretty creative way to assist clients in generating down payment money. And so I wanted to talk about that, but I thought I'd also talk a little bit in general about some of the products that Valley can offer on the mortgage side and some of the reasons or differentiators that might set us apart from some of our competition. Nothing formal, but in there I put a one sheet which kind of talks about what we like to highlight when we're out calling. And Jack, you'll kind of appreciate, you mentioned earlier that you, friends with Fred Thompson. He's one of my loan officers. Just to let you know, I'm the sales manager based in Tampa. I've got 5 loan officers that I work with plus myself, so we're not, we don't compete with each other. We're not territorial. It's cooperative. So this was a one sheet that Fred wrote up and did a presentation really recently, and I liked it so much I kept it, and I wanted to share it with you all, giving him full credit for having written it.
Taking credit for himself.
No. Carter is another guy that we work with, and so my point here is that you call any of us. We're all happy to help. We all work for the same team and all pull in the same direction. So if you can't get a hold of me, Fred's in Carrollwood and Carter's at Ybor City with us as well. But some of the bullet points. One of the things that we really specialize in is jumbo mortgage lending. Valley's super aggressive on the products and the interest rates. This is an example of a recent interest rate from earlier, or from last week, I suppose. And you can see they're pretty aggressive. We can go up to 95% on a jumbo purchase. Max loan amount of $10 million. Fred's still waiting to hit that one. When that one comes through, he may retire. We'll all know when he rings the bell. Equity participation, that's what I'm going to talk about mostly, so I'll skip over that for now. Valley has a really unique product in that they have a true bi-weekly from the beginning loan that is set up. It takes half the payment every other Friday via auto debit, and it's not a bi-weekly added on after the fact. It's done at the note level at the time the loan closes. And we generally give a rate discount for that particular product. So for folks who want to set their payment up automatically, like I said, it debits every other Friday. We try to match it up with their payroll date. That's the idea. So you know how that works. You can turn a 30-year loan into 22 or 24 years, something like that, 15, 12, 13 years, right in that range. So that's actually been pretty popular because Valley discounts the rate. It's usually an eighth better than what the non-bi-weekly is. So it's a way to get the rate down a little bit. Everybody has conforming loans, and so do we. Fannie Mae, Freddie Mac, FHA, USDA. We compete real well in those areas and are certainly happy doing loan amounts of any size. There's a first-time homebuyer program that you all might be interested in because it helps a lot of brokers and realtors sell some houses that, because the financing that Valley is able to offer is a 30-year fixed rate, 95 or 97% financing with no PMI. The qualifier is that the home has to be located in a low or moderate census tract. And not sure how to find out, you probably do, but if you want to see if any of your listings are in low to moderate tracts, I can help you do that. Just send me the addresses and I will do the research and let you know. But if a home is located in a low to moderate tract and you have a first-time home buyer, that is to say they haven't owned a home in the last 3 years, they can qualify for one of two programs. The first program is a 95% loan to value, and they don't have to have a minimum income level. If their income happens to be lower than 80% of the median income, this is maybe too technical, but just to give you the idea that there is another product where they can go as high as 97%. So 95 or 97, first-time home buyer, if the home is in a low moderate census tract.
Can you also then qualify if you had any grants or down payment assistance programs doing that as well, or would that?
It does. There's a requirement that a certain percentage of the down payment come out of their own pocket, depending on those two programs, but it does also play with community seconds or DPA, down payment assistance, and those kinds of things. There is a requirement that they take a first-time home buyer seminar and pass the class, but it can be done online, and it's not that time intensive. It's certainly worth the effort to not have to have PMI down on that size. And of course, that's a 30-year fixed rate loan. It's a loan that Valley keeps in their portfolio, and we do it because we need to show that we're servicing the lending needs of our entire community. So for as many jumbo loans as we do, we also have to do first-time home buyer loans. So it's a unique product, and you all might really like to know about it. Through my group, the residential lending group, we do home equity lines of credit. So if there's a desire out there, a really good HELOC product starts at 2.99%, and that can be used as a purchase money if for some reason that a person really wants a line of credit to buy a house, and some do. We can use a product like that.
Is that term set for 12 months, or?
Yeah, the rate is fixed for 12 months, and then it adjusts to a prime or prime plus situation after the first year, depending on the credit score and the loan to value. Okay. The bank pays the closing costs on that loan for loans up to $250,000. Now, of course, after the first year, the rate is going to be variable, but a lot of folks have a short turn time to be in and out, and it's attractive to get your closing costs paid for. We do construction to perm loan. It's a one-time close. If somebody owns or is acquiring the lot, they can contract with a builder. We'll finance the lot acquisition at the same time. Set the money aside and approve them, and then administer the construction loan. So as the home is being built, we do inspections and fund draws to the builder. Once the home is finished, they get the CO. The loan modifies to its permanent phase. It doesn't require another closing. So it doesn't require another set on closing costs. The nice feature about that is it can be a 30-year fixed rate from the get-go and locked in as such. It can also be a 7-1 ARM. So there are two choices. If you really want the lowest rate, 7-1 ARM, but also a 30-year fixed rate. Valley retains servicing on all their mortgages, so it's kind of nice to not have your clients bounced around from place to place to place. People realize kind of what a hassle that is once they get stuck in that trash. So
Don't try that right now with my own.
Yeah.
Yes. No fun.
All the loans we do are subject to be sold, and Valley will sell the underlying asset, pull them up and mortgage-backed security and sell them out, but the client never knows because the servicing always comes from Valley, so we retain the servicing. We also have an active wealth management group, and we can give significant rate discounts for clients bringing over large deposits. Generally starting around $250,000, we discount the rate by 1/8. And that's for the life of the loan, as long as they keep those funds with Valley. We acquire a new client, and then it goes to a quarter if you put $500,000 on deposit. So oftentimes those attract folks who are doing jumbo loans. If they're able to qualify for a jumbo loan, oftentimes they have the assets to establish a new relationship. And it kind of goes hand in hand with the idea of what we'll talk about next, is the partnership between Valley National Bank and a company called Unison. Unison specializes in providing down payment participation with the client looking to purchase a home, to help the client reach the 80% mark. Come on, take us over. There's one of these. There's a packet right there. I'm Scott, by the way. Nice to meet you. So, you take a look at this flyer, and this is designed to be, at a glance, a general overview and some of the most common questions that people ask about Unison. Anybody ever heard of it before? Yeah.
It's an interesting problem. I hear what you about it.
It is, and it's one of those that at first, the first time you hear about it, you go, wow, I'm not sure that would really work well, because you start thinking about, because it's so different. But the more you study it, the more you think about it, I think that there really are certain pockets of people who could benefit and who would find it to be very useful. So I'll just tell you what I know about it, and then you guys can decide. Like I said, this one sheet will give you some answers. Now, there's a next level presentation that can be done if you guys are interested in taking it at a future date, and I can have somebody from Unison come in or Skype in and go through a 25-page deck that I don't even pretend that I can explain it fully, but I'll leave that up to you guys. And so I didn't send it, Nico, because it's very complicated. But for those interested in that, it's something to really consider. So Unison provides, I'll just read this here. Home buyers can contribute more than half. Unison invests alongside home buyers and can contribute more than half of the down payment on home purchase. It's a home ownership investment, not a loan, and there are never any monthly payments and no interest. So Unison becomes your partner in acquiring the home. They have an interest in future equity in exchange for a down payment. Generally, the way it works is someone will put 5% of their money. Unison will give a 15% down payment, getting the borrower to an 80% loan to value. Borrower qualifies as though he or she are putting 20% of their own money down. So they escape PMI. If it's a jumbo loan, they don't have to worry about loan to value going over 80%. They get the best interest rates because the loan to value is in the sweet spot rather than a 90 or a 95% loan. The Unison does put a lien on the house, but it's not a mortgage. And the agreement with Unison is that in the future, when you sell the home, you share the equity appreciation with them at the time of sale. And there are a lot of, well, what happens if this and that, and this answers some of those. But generally speaking, if the home goes up in value, and if Unison provided 15% and you put 5%, they take about 50% of the appreciation from the time you bought the house to the time you sell it. I know, right? So you go, oh, wow, 50% sounds like a lot. But consider this. If the home doesn't go up in value, their end is 50% of zero. They are a partner. They are not expecting to be paid back unless there's appreciation in the home. And if the home goes down in value, which we all used to think could never happen, and we all now know better that could possibly happen, and you sell the home after 3 years, Unison will share in the loss. They'll come to closing with the check and pay their piece of the shortage.
So
that's it. Sink in for a second.
Well, I was going to say, as far as I guess they're not getting involved in too many short sales. If somebody buys a home and even if they get a second mortgage and they're upside down on their mortgage, and they try to get out of it and end up going to a short sale or foreclosure, then Unison's basically out the street.
They have invested in a asset that went down in value from the time they invested in. They're going to sell it at a loss.
That brings up the other part of that, as far as helping out with down payment. In that scenario, they got a second mortgage to help out with other issues. That would not, first of all, is that allowed by Unison, or do they have any kind of say in that?
Well,
scenario?
Typically the way it looks when the loan closes is they'll close with an 80% loan. Unison puts a lien on the property, but it's not a mortgage. It's a lien that protects their position, and then they have to be interacted with or consulted anytime the borrower wants to refinance, or if they want to add a home equity line of credit that would come between the first mortgage and Unison. So using a subordination agreement, Unison says that they will do that, provided they maintain the same level of equity that was there originally. So if the home goes up in value after a while, they will let the homeowner tap some of that equity for his or her usage, as long as Unison, in their opinion, stays protected as to their original investment.
Is there any additional underwriting that needs to be done on a particular property, or is it all
Yeah.
based on the individual owner?
Both. That's a great question. So Unison has a full-on shop that they manage separately from that. So what we do is, when the Valley, the home buyer, and Unison all agree that we can share information back and forth. We share the loan application, the appraisal with Unison, and they underwrite the borrower similarly to how we're going to underwrite them for the first loan, for the first mortgage. Now, they have, in our experience and what they have told us with their other lenders, is if the bank approves the loan, they are going to approve the use of the down payment assistance, because the criteria, they write their criteria to match ours. But they also take a different kind of look at the property, and on their website, and working with one of their counselors, the first thing they're going to ask you is the address and type of home it is. They have a proprietary model on their website where they know what they want. So from the address, they can approve a property address instantly. So you can know, hey, is this house going to qualify, before you get all the way down the road and they underwrite you as a borrower. They first look at the property address. And so, at first I thought that was kind of interesting, because what doesn't qualify. So in working with them, I see now what they're after is a type of home that's normal and customary for the area. Yeah. They want to weed out any log cabins that, are in Tampa that just don't have the ability to appreciate. So they're going to try to screen that stuff out. They do second homes, and there's some of the criteria in here. They stay away from investment properties. Condos are okay as long as they're okay with us, the bank. So that's okay. You can see that they charge a fee for their service, 2.5%. That's of the amount that they're putting up. So
I have another question.
Yeah.
As far as if you do get a contract with them and they help you with down payment assistance, after a couple of years, if you can afford to get rid of them and have them out of the picture, is there an acceleration or anything like that?
That's a great question. They call it a buyout provision.
Okay.
Yeah. So after 3 years of seasoning, you can request a buyout, and they will have the home appraised. They'll deduct any capital improvements that you can document. So if you remodel the kitchen, they're not going to share in the equity, the appreciation that comes from the remodel, and that those hard costs get deducted. And then they consult with the homeowner. Bank's out of it by that time. But Unison and the homeowner come to an agreement and say, okay, yeah, my house has really gone up $100,000 in value in 5 years. We're going to split that. I'll pay you $50,000 Unison as a buyout to get your money early. But then you're out of life forever. And Unison doesn't participate in any upside from that day forward.
Right. So then if you still own the house and then 5 more years later it goes up and appreciates, then they're no longer getting a cut.
That's right. Yeah, the homeowner keeps the entire appreciation from that point forward. Good. Yeah, it's interesting in that it can provide. We try to figure out who really could benefit from this, and we have figured that there are high-end home buyers who have assets but don't want to turn that into liquid down payment. They don't want to have to sell wherever it is, their mutual funds, or tap company stock, or they don't want to have to pay the capital gains on. So for whatever reason, while they have plenty of assets, they don't want to have to turn it into down payment money. So they could use a program like this. It also helps buyers on the opposite end of the spectrum who may be buying their first home or a more modest home and simply want to get out of paying PMI and finance 80% rather than 95%. So we've done both through both types of borrowers. And it's really more about the mindset of the borrower if they want to have a partner in the equity of the home that they're buying. So once they get comfortable with that idea and they kind of shed their preconceived biases about that, then it starts to sink in, and some folks have a real interest in it. So kind of how it works, back to your original questions, we take the application from the borrower. Right away, if they're interested in it, we share that information with Unison. A representative from Unison calls the borrower and walks them through all the questions, all the process, because they don't want me representing their product, just like I wouldn't want them doing the first mortgage. It's a handoff for sure. But then we underwrite the files concurrently, simultaneously, so that we all get to closing at the same time. We get to closing, the borrower brings their 5%, Unison sends a wire for their 15%, we send our 80%, and buyer never knows anything. Seller never knows anything.
Sounds like a product that it's good for millennials that are trying to get their first house. Sure.
That's one of the areas that I think is going to be big with, because they can put 5% down and get 15%. They can put 10% down and get a 10% contribution. If you put 10% of your own money and 10% in Unison, the cut goes from 50% down to more like 33%. So that Unison keeps in the future. So it's a sliding scale. The more of their money you use, the more you're going to give them in equity, and vice versa.
Do you have a website that has that sliding scale? Is it available to us?
Yes, yeah. It's in this deck that I mentioned earlier. It's a 25-page deck, and I'm happy to send it out. I just didn't want to blow you up with technical fine points, but it's designed to walk someone or a class through the presentation, but it talks about those ratios, how much they put in, how much they get at the end, and really much more in-depth about buyout provision, or what happens if I want to add a HELOC and refinance. So all the questions you guys are bringing up are really addressed in that thing, and it's a nice tool to use. I'll send it out to you later.
Yeah, please do.
Absolutely.
Yeah, because I think one of the biggest things that we're seeing with buyers today is that a lot of them can make the monthly principal and interest payments. It's coming up with down payment cash or closing costs cash. And so anything that can help them with cash up front, any products out there that are doing that, those are the most popular ones that I'm seeing today. Because they might have a steady job and they can make their monthly payments, but coming up with that cash first payment is the harder part for them.
Right, you're right. And I think that's probably why we see so many borrowers trying to get 95 and 97% financing. And what ends up happening is having to add PMI and then borrowing 95%, their payment is larger than it needs to be. It's a big payment, but they just don't have the down payment to reduce the payment, to reduce the loan balance any further.
Is this FHA?
No, in fact, and that's a great question. No FHA and no Fannie Mae product, so it can't be a 30-year fixed rate. It's got to be a portfolio loan for us.
Now, does this affect the interest rate?
No, but only in a good way, in that it keeps the loan to value at 80%. or less. You could get the loan, you could get it down to 75% if that's what's necessary to get the best interest rate for a particular product.
So this doesn't impede them in any way because they don't really have the equity.
Right. And that's where the partnership comes in, because Valley has studied this program and it met with Unison at high levels. They, not all lenders can partner. And right now, as far as I know, we're the only lender that can partner to 95%. A couple of others partner to 90%, but Valley partners up to 95%. So they tell us that soon, maybe within the next 6 months, we will be able to attach this to a traditional Fannie Mae 30-year fixed rate loan. But right now, Fannie Mae won't permit this type of arrangement. So that's why we can't do it. So for us, it needs to either be an on loan or a biweekly loan I talked about earlier, or a jumbo loan. Those are all portfolio loans in our world. So if somebody does a $500,000 30-year fixed rate loan, because it's over the conventional loan limit, they can put a Unison down payment behind it.
Is Unison nationwide, or are they just here in Florida? They operate.
They're based in California, and they are acquiring states swiftly. Florida is a new state for them. They've been operating in California since their inception, 7 or 8 years, something like that. New York, they do a lot of business in. What they have found is that each state has their own mortgage rules, their laws, and so they have to build their product to be compliant in every state they want to work in. So they're doing them one by one. Florida was their most recent one. So we've only been partnered in Florida with Unison a few months now. So yeah, it is new for us too. And we're getting a lot of mixed reaction. We get a lot of favorable reaction, and I get a lot of reaction that's not so favorable. So it may be one of those things where it takes some time to really permeate through and become more common. This idea of sharing the equity, future equity of your home with a partner who doesn't live there, who doesn't, is not your landlord, is not your mortgage holder, someone who just gets a piece of the pie, even if the pie is not when the time comes. Shoot, what else can I tell you? I know that's a lot to sink in.
Say that you shared with us the Times article on this, and I read it when it came out.
That's right.
And I was really excited when you said you guys were partnering with them. I thought that was really interesting, because I do think that it's a personal financial decision. For some people, they just want to keep all that equity in home no matter what. But for other people, if they really want to own a home and they want to do a reasonable amount of monthly payments, and they're okay giving up some equity for it, then it could work for them. I agree it's not going to work for everybody, but I think for the people that it could work for, it's an excellent program.
Yeah, I agree with you. I think it's another tool to satisfy a certain type of home buyer who is comfortable with the idea, understands how it works, and can maximize it to his benefit. You can either use it to buy a house that you might not qualify for otherwise if you had to put the down payment yourself, or you can use it to lower your monthly payment by having them contribute more down payment, because it lowers your loan balance, plus it escapes PMI.
Just curiosity, what's the word I'm looking for? Credit score. What credit score? Minimum credit score?
Credit score 680 is what they like to have. So it's not for folks with real bad dinged up credit. 680 is kind of that middle zone where you can still get a lot done. Yeah, so the Times article's in there. That's a nice piece. It really gives you a little more information, and then this deck I'll send you later on is going to answer all of it. There also is a website. Anybody can go to it and do a lot more research on it. You can also plug the address of your house or a prospective house in there just for kicks to see if it will qualify. I venture to guess that anything we're working with in this area would qualify. It's really to catch.
Yeah, I'd like to have a little storyboard in Google Sheets or something that I could throw up real fast to tell prospective buyer, okay, this is what this is what it's really gonna cost you that you could display.
Yeah, some real world examples. You might
Like
find
that records, motion records, see?
Can't do that. Not that good.
I mean, this could be our toolkit.
Yeah. I like it. Any other questions for Scott?
Yeah.
Investors would like this. Investors that are not necessarily looking for resale value, but more like looking to get a tenant in and just make money like monthly.
Yeah, you know, I would like one day if Unison would open it up for investment properties, but they want to reserve it for primary and second homes right now, so they're not going to play in that space. But that's not to say they might not one day.
I don't know if it would be that beneficial for investors since they would have to split the equity in the home.
I mean, it's only for resale.
Right, so if the home is cash flow positive every month, you know, that might be my bigger goal as an investor, and I'm okay giving up some of the equity at the time I sell it if my home is cash flow
And they would
positive.
enjoy the depreciation.
Right. If my home is not cash flow positive, you know, then I'm gonna rely on the equity that I'm gonna get at the time I sell it, in which case the Unison might not work so well, but if I'm cash flow positive, you know, that's pretty important.
Right.
And considering that there isn't any dictate from Unison as to when you sell it. So if you're a buy and hold cash flow property acquirer, you can own for 30 years. And you can also, then you could elect to do a buyout too when you get to the right point, you know, and get them off your property.
But you say it is restricted to like first and second property.
Yeah, it is right now, yeah. So it's really just theoretical to kind of talk about how an investor might utilize it. In hopes that one day Unison might expand to include sort of an investor as a client.
Right, and you said it's fairly new. How long has it been in Florida?
Just a few months.
Yeah,
So
so
I don't want to say since
same
April.
time to grow, and I'm sure that they'll expand as far as what you were saying.
Yeah. It's I think they have their hands full getting traction even with the primary resident home buyer and maybe some second home stuff. They've got to go out there and get some and build a portfolio. They're funded primarily from it's not quite a hedge fund, but it is a group put together that solicits funds from investors, pension funds, municipalities, whatever. So they have to be able to produce a certain rate of return to keep their investors happy. It's a long-term investment on their part. And that's why they don't have any ability to prompt the sale. There's no call provision. There's no way they can make anybody pay it off early. So, yeah.
Scott, yeah, appreciate it.
Yeah, I got a couple extra cards are around, and I'll leave some with you if you need to find me, but there's also one in each of the folders.
Well, just a personal shout out to it. I know a lot of people at what used to be US Bank, and now with the tools that Valley National has, I think it's an excellent combination. So if you get the opportunity, set up some time with Scott, his team. I know Jackie and Fred very well. Good people and good products. That's a combination. So I think you guys are going to do well.
Yeah, much appreciated. Thank you. We're excited. We see real growth ahead for our group, and we're also, just to let you know, we are looking to expand our sales force too. So if there are any mortgage lenders that you all love and you work with who aren't happy where they are, please pass along my information to them, because we're looking to expand our team and bring these products to more folks than we currently do right now.
Good. Appreciate it. Thanks.
Yeah, my pleasure.